Asian stock markets were broadly lower on Thursday over concerns about the latest U.S. China trade negotiations. Japanese auto stocks slumped. Toyota and Honda each fell 3.2%, weighed down by news that the Trump administration is considering imposing new tariffs on vehicle and auto parts imports. Japan's Nikkei 225 index slumped more than 1%, with the yen continuing its latest ascent, and Korea's Kospi index fell 0.3%. Hong Kong was a rare outlier, gaining 0.1%. Thursday's Big Theme Malaysia's new reality is starting to hit its markets hard. The Southeast Asian country's stock market was relatively quiet immediately after Prime Minister Mahathir Mohamad's stunning election upset over embattled Najib Razak on May 9. That changed this week. The opposition's ousting of the ruling coalition marked the first transfer of power in the tropical, resource-rich nation since independence in 1957. But with that change has come increased uncertainty in Malaysia's financial markets. Its troubled state investment fund, One Malaysia Development (BHD), is sitting on more than $8 billion in debt and has almost no cash flow, the journal has reported. How to repay 1MDB's debt is a major issue for the new government. Malaysia's stock market was closed for 2 days immediately after the vote. After that, it didn't move more than 0.5% in either direction for the next 7 trading days. On Wednesday, the FTSE Bursa Malaysia KLCI index fell 2.2%, its worst drop in 2.5 years. It fell another 2% on Thursday before bouncing back a bit. At its low during the day, the market was on pace for its worst 2-day decline since the index's inception in 2009. Outstanding dollar bonds of some key Malaysian issuers, which are considered a proxy for the country's credit, are flip-flopping. The yield on 10-year bonds of 1MDB are up to 6.80% from Wednesday's 6.32%, according to IHS Markit. Bond yields rise when prices fall. One indication of less uncertainty is in Malaysia's credit default swaps. Its 5-year CDS, the cost of insuring government debt against default, has fallen by 0.8% since Wednesday and down 11.5% since the election. The Malaysian ringgit has fallen 1.1% against the dollar since May 7, ahead of the election, including a 0.2% drop on Thursday, according to Thomson Reuters data. Market reaction. Valuations in Malaysia have been elevated against history over the last year, which does make the markets more vulnerable to a shock, Paul Daines, chief executive of Edinburgh-based Martin Currie, a subsidiary of Legg Mason Asset Management, wrote in a report this month. Malaysian stocks had risen over 5% on a year-to-date basis through April, but have since given back those gains and on Thursday fell into negative territory for the year. Elsewhere, crude oil prices fell slightly. In the U.S., the benchmark 10-year Treasury yield dipped back below 3%. Minutes from the most recent Federal Reserve meeting, unveiled Wednesday, showed the central bank is in no rush to accelerate its pace of rate increases. Surya Bhattacharya contributed to this article. Write to Stephen Russellillo at stephen.russellillo@wsj.com and Mondiu Dalal at mondiu.dalal@wsj.com.